This week is a high-risk week and most traders and investors are not ready for it. The calendar is packed with critical economic events that can shift markets very quickly. Job data, inflation and central bank decisions that don't just move one asset, they move everything. In this video, I'll walk through the CTKS Economic Risk Assessment, show you where the real dangers are hiding, and explain how stocks, commodities, crypto, bonds, FX, and volatility are all intercorrelated and interconnected. Then we'll break down the bull and bear targets on the charts so you know where risk turns into opportunities and where it turns into losses. If you don't understand this week's risk, you're trading and investing blind. And that's really dangerous. Let's dive in. Welcome back, CTKS Masterclass students and Elite Service members. You're not here for opinions, predictions, or headlines. You're here for CTKS structure, risk awareness, and professional execution. The CTKS method exists for one reason: to help you to see the markets clearly, manage risk intelligently, and operate with confidence when others are emotional. Today's video is about risk intercorrelation, interconnection, and preparation. It's a very important video for you to watch all the way through. Kate and I are always looking to give you an edge inside the market. So creating the CTKS Economic Risk Assessment is exactly that. So let's look across this week from the 15th to the 19th. The major macro theme is definitely central bank divergence. The central banks are meeting this week: the Bank of England, the ECB, and the BOJ. Now, the Bank of Japan, when it meets, it can rock markets, you must be aware. And the Bank of Japan is tightening. It has an 85% probability of hiking rates to 0.75% because of inflation data. Bank of England is easing, a 90% probability of a 25 basis point cut. The key to understand: when the central banks cut interest rates, they have a softening economic system. Cutting interest rates isn't a good thing as many people think it is. You've probably seen already the divergence. The Bank of Japan is hiking, the Bank of England is cutting. And of course, the Fed has already cut. This is going to create a lot of volatility this week. And just remember that the Bank of England has a split vote, and the Bank of Japan, the increase in the rate could cause the Japanese carry trade to unwind. If it does, that's going to be significant. More on that later in the week. And I'll keep you updated every day, so if you're not subscribed, please smash that subscribe button. You definitely don't want to miss out on anything. Now, the European Central Bank is expected to hold interest rates steady. So right across the world, you've got this central bank divergence. Now, why is this important? Because the central banks control the cost of money, particularly the cost of debt, and the whole economic system globally is run on borrowed funds. Therefore, this week is really important to understand. We could see outsized aggressive moves on commodities such as gold and silver. Bitcoin is not quite digital gold just yet. It's more of a risk-on asset like the VIX. Copper and oil could be supported by global demand but capped by US slowing fears in the economy. There are some definite mixed messages as decreasing US unemployment is fuel for commodities and hard assets, and especially Bitcoin. But there are many things happening. And what you can see when we look in terms of an aggregated risk impact, there are 9 risk-on events, 8 risk-off events, and 7 highly sensitive events. So when we look into this market, a lot is happening in the coming week. We're basically going to see a stress testing of the global growth narrative. And we already have a forecast dip in US core retail spending, and that threatens to undermine the primary engine of gross domestic product. The other thing to understand, non-farm payrolls is forecasted to collapse to 50,000 from 119,000. This is going to put the soft landing thesis under threat. And this is what markets are expecting. Another thing to understand, if the CPI remains sticky, the Fed's ability to cut interest rates aggressively will be constrained. That means they won't have that capability. Now, we've got some other ways of looking across the market. So central bank activity inside the Eurozone, the UK, Japan, and the US. GDP coming out in terms of New Zealand data. Inflation in Canada, the UK, the US. It gives you a really good idea about what's coming out globally. Now, I'll also give you a bit of an understanding about what's happening in terms of high-impact economic events. Monday, there's nothing. Tuesday, moderate risk on is expected. Wednesday, strong risk off. Thursday, mixed and volatile. Friday is literally the decider. It's either going to be risk on, and I'll explain that in future videos, or it's going to be really volatile. So one thing to just keep your eye on, Friday is going to be up and down. If you like this kind of content, please make sure that you subscribe so you don't miss anything. So let's just look in Monday, there are no high impact economic events. And in Tuesday, we have these ones. Across Canada, we're expecting risk off due to disinflation and lowering demand. So what we have is this is the time in Aussie, the region, the event, the previous, the forecast, and the bias. So you can see the CPI coming down. This is disinflationary. Central banks that just walk a tightrope quite seriously. Median CPI just expected to be flat. The trim CPI expected to actually decrease. Inside the UK, this is actually good because the claimant count change, which is an unemployment figure, is supposedly forecast to reduce quite substantially. So there's more jobs and fewer claims. That's pretty cool. When we look into the PMI from the Eurozone, German flash manufacturing PMI and the German flash services PMI, manufacturing is strengthening, services is weakening. But when we look across the UK for the flash manufacturing and the flash services, both are increasing. When the PMIs increase, that strengthens the local currency. So in the Eurozone, if the euro dollar increases in strength, it will hit the DXY. We expect moderate risk on Tuesday. Monday will be just a little bit flippy all over the place, but Tuesday, moderate risk on. And each day, I'll just release these different areas so you can understand what's underneath them. So make sure that you subscribe and tune in each day. Rule 446 is really important. All markets are intercorrelated and interdependent. Now, what this means is what happens in the US will impact Australia, the Eurozone, China, Hong Kong, India, you name it. What happens in the Eurozone will impact all markets. All markets are intercorrelated. Now, this also means what happens in the commodities market can impact crypto. What happens in the stock market can impact crypto. And we've been through some very high impact at a broad level economic events that we need to keep our eye on. And Friday is the big one. Now, the Elite Service members, I already gave you the exact charts to watch and target levels. Make sure you keep those in mind this week. We will have advance warning of any sell-off, if that occurs, and any rally before it does as well. Bitcoin is like the VIX and it trades 24/7 by 365, so we need to look at it. And thank you for everybody who wished me a happy birthday. That is just beautiful. Thanks so much. Now, when we look at Bitcoin, we're just zoomed out. We're on a 30-minute basis and heading towards the start of November. So we're just looking at a couple of weeks worth of data here. Now, what people unfortunately on social media say, this is manipulation, that's manipulation, that's manipulation, that's manipulation. Just log into social media and see it for yourself. These people have like literally millions of followers or hundreds of thousands of followers, and the followers are like saying, yeah, it's manipulated. Oh my goodness, it's not manipulated. It is structure. And the elite members of the service know exactly where the structure is because I mark it out for them. And of course, with level 1 and level 2 standard certification, the masterclass students, you can just mark up your own charts. Now, what we can see here around that 94,300 level, there's overhead structural resistance. These levels are the strongest and most powerful levels of support and resistance in existence in technical analysis. This is why we are the top 1%. Now we know just a little bit above 94,000 and around that 93,200, there are a lot of sellers inside the crypto market, especially for Bitcoin. And if we can't break out of here, we cannot resume an uptrend. Now, what is the way that the big institutions get people to come back and break these kind of barriers? Remember, Bitcoin is global. Every country is buying it. It is not just focused and concentrated in one country. It's right across the world. Now, how to get out of this is to basically pull the shorts in and then liquidate them en masse when we reach suitable strong structural support. Now you can see around that 90,900, there is structural support, but it's unfortunately quite weak. There is also structural support around that 87,700, but that's also quite weak. So when we look at the crypto market, what we're looking at is a lot of weak structure. Now, if you're an elite service member, you have the paths, you have the extended version of this and a trading view indicator. You can just pop it on your chart to see what the levels are. Now, I'm going to talk to you about structural targeting because it's really, really important. If we lose that 93,000, the structural target immediately below it comes alive. That's like the 91,000. If we lose that structural level, and you can see the sellers have been very, very busy here, pushing it down to around that 88,000. So you get an immediate structural target on a structural failure. And structural failures and structural passes are talked about extensively inside the Profiting Masterclass. So if we lose the 88,000 level, 85,100 is the next structural target. If we manage to get structural support and start to see strength inside the market, bullish targets will be opened up. At the moment, the bears have got the crypto market. Now, what does retail do when they hear something like this? They think that a sell-off means the bulls have been all executed, the positive momentum will never ever happen again. Like when it comes down like this, it goes like this, and it goes back, and it goes down, and it goes up. Price is always moving in a wave. You must be very flexible. It's really important. Unlike other places, we actually understand where the important turning points inside the market are. If we cannot breach 95,000, we're under negative pressure. We also know the significant levels inside the market because these levels are always red to the right. Let's talk exact. So for a bullish case, we need to get above and confirm the 94,190 area as structural support. That will open up areas below. If we look at the bearish case, we've got support around that 87,900 and around that 85,180. So keep your eyes on 87,900 and say 84,900. But we know where the exact levels are, and you can zoom in here to get the absolute precise levels. So a bullish case, anything exceeding especially 95,000 is incredible, but it has to stay up there. It has to consolidate, retest, resume upwards. If we get bearish momentum, we're putting the 87,900 and the 84,900 into play. If we get panic, even lower levels. Looking into total crypto market cap, one of the things that we see, we're under an absolute barrage of overhead structural resistance. This is favoring a movement down to the 2.94 trillion. This is a gravitational well, so we could get reflection up if the macroeconomic condition turns out positive. That's why doing that risk assessment is going to become vital, and that's why I'm doing it for you each day from now on. Gold and silver are very good to look at, and we can trade digital gold through PaxG and a couple of other places inside the crypto market. We can see gold has left its consolidation path and is heading positive. Now, this is pretty good and something that we would assume anyway. I talked extensively about this inside this month's service video. Zooming in to price, a lot of people would say this is manipulation on gold. Gold got up to that 43.51 and then it just sold down for absolutely no reason. Hang on a second. There's structural resistance at that level, around that 43.50 level. So when people say it's manipulation, they're saying, I don't understand structure. Now, we did have a structural overshoot on that 4,300 level, and it did come down nearly to the 42.52. But as you can see here, there is a ton of underpinning structural support on gold. Now, this favors a move back to the 4,300 around this particular area of structural overhead resistance, say that 43.06. So getting above 43.10 and confirming it starts to open up a bullish structural target back to the 43.50. And Elite Service members, make sure that you're looking above and below this area as well. Silver has been incredibly strong, and we can see from the CTKS paths last month, it did very well. Now it's following the normalized positive price path at the moment. Elite members, you will know that I turn off price and draw these levels structurally until the end of the month, until December, and then I give you a target. Under normalized price conditions, we would expect structural targets to be met onto the upside for silver at the current time. And you notice that there's a bit of a dip backwards here, and silver is so far following that path. So this path has not been generated from the current price action. It was generated from this candle forward without price printing. That is the power of level 2 standard certification. The force is currently very strong with silver, and we've seen that silver has already reached its positive price target literally 2 weeks in. So we could anticipate upward price momentum here under these circumstances. So silver is reacting to the divergence between central banks, and you understand about that. Now, when we look down here, silver went the same way as gold. And Elite Service members, what you can do is you can just get an area to reveal all the underpinning structure that exists inside this price chart as well. That is an added bonus for you. So we already knew that we had a confluence of structural resistance around that 64.50, and gold came into its own structural resistance there as well inside gold's chart. So as gold hit structural resistance, silver also hit structural resistance and came back to a base. And that base for silver was the 60.70 level. Now, what we can see, if silver actually gets a bid and it goes positive, and there's a lot of geopolitical uncertainty at the current time, and that is the predominant factor. It has a lot of underpinning structure, so we would anticipate it doesn't drop significantly if it gets bearish, but if it gets bullish, it could rise really, really quickly. In terms of our structural targeting, a bearish momentum to the 60.70 and potentially below. but bullish momentum up to the 6650 and potentially above. Looking at the template from the Profiting Masterclass, we can see that total crypto market cap, it's under all of that overhead structural resistance, it's coming down. Bitcoin is not being supported. But what I wanted to show you here was Ethereum. We can see total crypto market cap and Bitcoin coming down. But notice what Ethereum did. Now, why did it do this? Notice this structural support level around that 3090 mark. Now, what that has done, the buyers stepped in on this level. If you were ever wondering why structure is important, this actually proves it out to you. I would advise the CTKS students to make sure that you're doing your cheat sheet every day, and that's available absolutely free of charge from ctksmethod.org. Make sure that you're looking at your daily structural passes and structural failures, as per the Profiting Masterclass. You can check the monthly structural model inside the service. It's provided inside the video, and you can use that to develop your own long view forecasting models. Those dotted lines that you see are CTKS levels, and they're institutional grade structural levels. Level 1 is a lot of foundation work, but all the magic happens inside Level 2 standard certification. And just remember, the CTKS paths, they represent normalized price action for a month to the downside, the neutral side, and the upside. And they give a potential structural interaction path all the way to the end of the month. Typically, they contain about 90% of the variability month on month. It's also really important to make sure that your mindset is strong. As life constantly changes, flexibility is required. Now, so many people just have a fixed mindset. You cannot have a fixed mindset in a market that is constantly moving in a wave. It's moving between like the bearish momentum to the bullish momentum, back to the bearish momentum, and vice versa. And as I explained in this month's service video, there's a way that you can flip this dynamic. You can always have a bull market if you know what to do. This month's service video is utterly fantastic and very, very valuable. Just make sure that you have the flexibility. If you're listening to social media and they're saying Bitcoin is going to go to X dollars, make sure that the structural passes are taking it there. If people say, oh no, it's all over, the bear market is in full swing and Bitcoin is going to go to $30,000, well, make sure the structural failures are occurring to back that up. Acid test every single thing through structure. And therefore, you can just chill out because you know where the key levels are. Keeping your mind positive is really important, and please make sure that you tune in to the CTKS music. It can really help you out. Links are in the description. Just always know, and they're completely free, so it costs nothing to listen to it, and it can change your life. Just know that the universe wants you to succeed. Every day you can show kindness, integrity, and gratitude. Now, why is this important? Why should you be kind? Why should you have integrity? Why should you have gratitude? Kindness, integrity, and gratitude are three things that people with abundance have. If you have scarcity, you're not going to be kind, you're going to be angry. If you have scarcity, you're not going to have integrity, you're going to have desperation. You're going to do anything that you can to just survive. If you're living in scarcity, you will not have gratitude, you will have entitlement. Entitlement says, I am owed because I breathe. Nobody is owed for anything. You, me, no one. And there's a bit of a secret in life. When you actually show kindness, integrity, and gratitude, you attract all the abundance to yourself. Abundance is attracted. And this is something that I can talk about in future videos. Just understanding how money works and how it is attracted to you is very important. If you reject something, you cannot attract it. If you live in scarcity, if you can't do line 2 of the CTKS Creed, and you're wondering why you are consistently losing money, that is why. Mindset is vitally important. A lot of people don't think it's important until they've become veterans. Veterans know that mindset is absolutely critical. Just stay dedicated and committed, focusing on getting what you want or learning from something that didn't work out. Never blame. Blame is scarcity. Blame is disempowerment. Blame is all the things that you don't want. Blame creates anger. Anger creates the opposite of line 2. When you blame, you are actually cutting yourself off from abundance. Who would ever think a crypto trading channel, a macro analysis channel could be something to do with mindset? In fact, the markets are the ultimate tool of self-development. And always remember, if you're going through a life pullback, the sun will always come out again. It will give you the strength for the next life rally. And you will require strength to get all the beautiful things that this world has to offer. I was talking about the CTKS music. Let's put the CTKS Creed music in for you. It's really fantastic. It will help you out. Have a great day or night ahead, my friends. Make sure that you subscribe and on with the music.
The CTKS Creed, daily positive affirmations for abundance, financial success, and happiness. Happiness, yeah. I know the universe wants me to succeed. Every day I show kindness, kindness, integrity and gratitude, gratitude. I know opportunities and life resets daily. Daily, I am worthy. I go slow to go fast. I start small and scale with Borsog. Life pullbacks give me strength for the next life rally. I am dedicated and committed. I win or learn and never blame. I win or learn and never blame. No, no, no. I always solve my problems with positive excellence. Positive excellence. All results come from the mind. A better mind creates better outcomes. Better habits create a better life. Better life. Better life. I am grateful that I can be more of a financial blessing